Welcome back to our channel, where we bring you insightful content on finance and accounting. In today's video, we will delve into the world of nonprofit organizations and discuss a crucial financial statement, the balance sheet. Specifically, we will explore how to interpret the nonprofit statement of financial position. Let's quickly cover the basics. A balance sheet is one of the key financial statements that provides a snapshot of an organization's financial position at a specific point in time. It consists of three main sections: assets, liabilities, and net assets, also known as equity. Now, in the nonprofit world, the balance sheet is called the Statement of Financial Position, or nonprofit balance sheet. While the terminology might differ, the underlying concepts remain the same. The Statement of Financial Position shows the resources owned by the organization, assets, the obligations it owes to others, liabilities, and the residual interest, equity, that remains after deducting liabilities from assets. Let's dive deeper into each section of the nonprofit balance sheet, starting with assets. Assets are categorized into two types: current assets and non-current assets. Current assets include cash, accounts receivable, inventory, and other assets that are expected to be converted into cash within 1 year. Non-current assets, on the other hand, consist of long-term investments, property, equipment, and other assets that are not expected to be converted into cash in the short term. Moving on to liabilities, they represent the organization's obligations or debts. Similar to assets, liabilities are also categorized into current and non-current liabilities. Current liabilities include accounts payable, accrued expenses, and any other obligations that are due within 1 year. Non-current liabilities encompass long-term debt, deferred revenue, and other obligations that extend beyond the next year. Finally, we have net assets, which is equivalent to equity in a for-profit organization. Net assets represent the organization's financial worth or the residual interest after deducting liabilities from assets. Net assets are typically divided into three categories: unrestricted, temporarily restricted, and permanently restricted. Unrestricted net assets can be used for any purpose, while temporarily restricted net assets have specific restrictions on their use, usually based on donor-imposed restrictions. Permanently restricted net assets are those that must be maintained indefinitely, and only the investment income can be used for the organization's activities. Now that we've covered the three main sections of the nonprofit balance sheet, let's discuss how to interpret this statement. The balance sheet provides valuable information about an organization's liquidity, solvency, and overall financial health. By analyzing the relationship between assets and liabilities, you can assess the organization's ability to meet its short-term and long-term obligations. Additionally, examining the composition of net assets can help you understand the level of restrictions and the organization's financial sustainability. It's important to note that interpreting the nonprofit balance sheet requires a thorough understanding of accounting principles and industry-specific considerations. It's advisable to consult with a professional accountant or financial advisor who specializes in the nonprofit sector to ensure accurate analysis. That wraps up our guide to interpreting the nonprofit statement of financial position. We hope you found this video informative and helpful in understanding the balance sheet of nonprofit organizations. If you enjoyed this video, please give it a thumbs up and subscribe to our channel for more finance-related content. Thank you for watching, and we'll see you in the next video.